represent Universidad Anáhuac Norte, and we analyze Industrias Peñoles, a solid foundation settled in an uncertain environment. The conclusion of our analysis give us the lead to recommend a hold position with a target price of 507 pesos, which is close to the current price of 502 pesos, with expected return of 4% during a 12-month period ending on December of 2017. Peñoles is a world-class mining company, but given the sector which is performed, it is affected by global impacts like political postures, but also the performance of big demand players like China, India, and the USA. The market capitalization of Peñoles is 192 billion pesos. In Mexico, according to the Mexican Mining Chamber, the sector represents 6% of national GDP. But also says that the sector was affected by new governmental duties, global metal pricing, and tax deduction requirements. That is why mining companies must be focused on capital returns and EBITDA margin. In this case, Peñoles and Fresnillo are above the EBITDA average margin of the peers in the last year, of 29%. Please note that Fresnillo is 52% EBITDA margin.
Peñoles, for 120 years, is consolidated as the most important Mexican company. The director board chairman is Alfredo. It's Camballeres, who received the gold medal, the Belisario Dominguez medal in 2015. Peñoles has a diversified structure that contains 20 operating plants and 14 mines, which one of them is Fresnillo. Fresnillo is listed in the London Stock Exchange. Peñoles also have sales in 35 countries, and 80% of these sales are export, and 17 remain in Mexico. The main countries Peñoles export are United States with 88%, Europe with 6%, and South America with 1%.
First, savings, additional incomes, and new projects. Peñoles made an effort to reduce operation costs through new technology and enhancements in their operation. Also, in these mines, they have been reducing these costs. They have also new projects, like Rey de Plata in Guerrero, that will produce gold, silver, copper, and zinc. Also, they have another project in San Julián de Fresnillo that is located in Chihuahua. They produce gold and silver. Also, the second point that supports our recommendation is valuation. Two different methodologies were employed to estimate the target value of the share. First, we use the DFCF model. We use a rate of 6.47 for the perpetual annual growth, a WACC of 14.6%, a capex of 5%, and this analysis gave us a share price of 5,004 pesos.
Now, for the DFCF model, we forecasted sales up to 2017 and assumed a currency rate of $23 to peso. Now, it is important to highlight that Peñoles receives revenues in dollars and pays costs in pesos. This mainly because of the export sales they have to its major clients in the United States and other countries. For our second valuation methodology, we use the multiples method, where we compared similar companies from all over the world in order to compare the enterprise value over EBITDA multiple. And having this comparison, we noted that we had a median of the group of 11 times, and we had a stock price of 515.2 pesos. Now, by using these two methodologies, we calculated the target price by weighting these models proportionately in 70% and 30%, this based on empirical knowledge. And we obtained a stock price of 507.6 pesos. Additionally, we ran a simulation process where we ran basically all the different levels of exchange rates that we could manage for Peñoles. And we obtained a probability of 62% to fall in a conservative scenario with a 24.5 exchange rate of dollar to peso. And this helps us maintain our stance. Now, regarding sales, we have for 2015 an increase of 5%, and in 2016 of 23%, which also helps us sustain our growth rate. And regarding debt, we have a healthy environment, also it's stable for the production of mines, because it's mainly invested in fixed assets, and this helps us additionally to sustain our capex.
This is the map of risk. We have three categories of risk: market risk, operational risk, and strategic risk. For this presentation, we will focus on the market risk because we consider that are the most important for the company. We consider three main risks. Risk 1, the commodity prices. A fall in the commodity prices could affect the results of the company. Risk 2, a slowdown of the Chinese economy. This is a key factor because China is the biggest buyer of commodities in the world. A decline in consumption could affect the results of the company. Risk 3, the economic policies implemented by the new President of the United States. All the economic policies are creating uncertainty and volatility in all the financial markets. Well, in conclusion, our recommendation is whole and it's supported by Peñoles has a fair value according to our financial projections. Peñoles has a diversified product portfolio. The company has a financial position, a good financial position with a healthy debt. But keep in mind, Peñoles is a mature company and the mining industry is complex and very volatile. Distinguished public, thanks for your attention. Please let us know your questions.
Good afternoon. Congratulations for your exposition. I have a few questions. The first one is, could you please remember us which is the increase on EBITDA that you're expecting for this year? Yes, the EBITDA, the growth that you're expecting for the EBITDA of Peñoles in this year, which is that number?
Will be more in line with the G that we calculated in the model. I don't know if it was understandable the graphic that we show the EBITDA margin. If it's related to that graphic or
No, just as you predict the sales of the company or as you predict the net income of the company, you should be predicted also the EBITDA. I just want to know what is the EBITDA growth that you're expecting for this year.
Okay. For instance, we obtained $1 million of the growth as we mentioned previously on 11 times, and Peñoles currently has 9, about 9. Okay, but let's say our assumption is that it will go to increase up to the level it has on the industry, and that is based on our peers' analysis. So we sustain that it will still maintain that model. If that's the answer.
Okay. Just another the big question is, you mentioned I don't know, sorry. Do you remember, or which one was the last information that you get from this company on quarterly information? I mean, could you check probably not, because the fourth quarter of the last year was presented just a couple of days ago, but could you check that information, because that information was really huge in terms of the growth of the company. Could you check it?
Yes. Yeah, we check it.
But you couldn't incorporate it in your model?
No, we couldn't.
Okay, that's good.
I just want to know the analytical support for your exchange rate level of 23, which has never been seen. How do you get to that number? And you talk about the empirical knowledge for the 70/30 weight. Who in the team has that empirical knowledge and why?
Okay. Based on the exchange rate, basically, we base that it would be a conservative scenario to, let's say, forecast more adverse scenario where we could obtain a higher level of this exchange rate. And we simply sustain that it would be fixed, since we have no references to make an actual trend of how the currency rate will behave. So it's simply an assumption we made on an adverse scenario. And the second question about the empirical knowledge, we based basically 70% because we gave more weight to the cash flows and the actual information of the company and of the market to reflect that into our model. Because somehow the enterprise value over EBITDA over peers mainly gives us a reference of how, let's say, the industry will go towards too, and we took it into account into Peñoles' valuation model.
Yeah, sure. To complement what you said, also the exchange rate, we took a forecast from a bank. Also, that's where the number would say. That's why that's 20%.
I have a very simple question. How can you recommend to an investor to buy a stock, and a stock is a risky asset, if the expected return is lower than the risk-free asset? Like if you buy a Mexican treasury bill, a SETE, you will get 5-6%, and you're recommending a hold on a risky asset with an expected return of 4%. In my opinion, this should be a sell. Sell this risky asset, and then buy a SETE is going to be a much better investment.
We consider that all the uncertainty and volatility that there in the world could affect the prices of the gold and the silver. And by this part, we consider that the recommendation is hold. But why hold? Because the strategy is for accumulating the stocks and forget more gains.
Yeah, and also the savings right now are 6%. And in the time we did the analysis, it was 3%. So
No, it was by the end of last year, it was
4%.
5.75. So anyway, that's exactly my point. It was higher than the expected return that you have. Today is at 6.25, but this was October. In October it was 5.75, I think. But anyway, it was higher than.
And since that day, the consensus of the market is expecting at least 2 more increase on the interest rate. So you can be
Actually, even and this is the 20-day SETE. The 1-year SETE was even higher. Okay, thanks.
just to try to connect. Sorry, this same question. If the CETES is not your benchmark, due the Bitcoin risk, I mean, do you have an idea of which could be the return expected for the IPC? I mean, for the índice de precios y cotizaciones at the same period? Do you have an idea or no?
Right now.
Okay.
afternoon. Congratulations for your presentation. You talk about the incomes of the company that is indexed to the dollar, and the cost is in pesos. But recently we are suffer a very high increase in the electricity cost. What could be the effect in the EBITDA if the Mexican government continues to increase aggressively the energy costs?
Typically, depending on how you calculate the EBITDA, because typically the companies put it down the part of comprehensive income and not typically locate it in the OPEX or expenses. This effect of the currency related to cost, I don't know if it's so. It will affect definitely because the company is quite related with the FX exchange. Actually, we mentioned during the conference, the speech. But the companies nowadays have a disposal of hedge funds to cover this kind of impacts in their operating process.
One question about valuation. How would your valuation or any valuation in a company will be affected by the change in dividends payout? And the other question is, how do you assume the 5% capex?
Okay. So on the part of the dividends, basically we have a major company. It could be a possibility that we could have also incorporated that model. But we have a very unstable market, very volatile, let's say.
1 minute.
In that sense, that's maybe the most important reason why we didn't think it could apply totally to use the dividends model. And on the second point, the 5% capex was based as an assumption, also because we have a 6.47 growth rate. So in that sense, we could compensate for all the investments that were performed and considering also the sales of them. So it was an assumption.
Thank you very much for your time, for being